Hi, today we are going to have a look at the 2013 Leaving Cert Higher Level Tabular Statement question. As with all tabular statement questions, we are given a balance sheet, we are given some monthly adjustments, and we are asked to prepare the tabular statement. So to start off, first of all, we are going to input our opening balances. So these we will get from the balance sheet. So first of all, we put in our assets, our intangibles, our tangibles, and our current assets. Now, when we are putting in the fixed assets, we're going to put in the cost as a plus and the depreciation as a minus, and they will give us the net book value. So first of all, goodwill, the net book value of goodwill is 45,000 from the balance sheet. For the land and buildings, we're going to put in the cost of 727,000 and the depreciation, which is minus 54,000. For delivery vans, we're going to put in the cost of 90,000 and the depreciation of minus 40,000. For stock, again, we're just getting this from the balance sheet, is 91,600. And debtors are 55,800, and there's no bad debt provision in this question. So if we total these, it comes to 915,400. We now want to put in our liabilities, which again we're getting from the questions. We're going to put in our liabilities less than 1 year, and then also the share capital and profit and loss balances from down below. So from the balance sheet, creditors are 75,400, bank overdraft 15,800, expenses due 4,200, ordinary shares are 600,000, share premium 80,000, and profit and loss balance 140,000. And the figures in yellow, they are not in the question yet. There's no opening balances for those. They will just be introduced throughout the question. So we will talk about them again later. So the total of liabilities, it comes to 915,400, and we can see that at the start, that is now balanced. And each month should also balance. You should have the same total for the assets and liabilities each month. The first month we have to input is January. So in January, Cooper, which is us, bought a premises and it had the following assets and liabilities. So again, this is a typical adjustment that happens every time you ask this question. So we just need to input our assets and our liabilities, and the difference then will be goodwill. So buildings are 340 and delivery vans are 70. So we're going to put those in first of all. 340 for delivery vans, 340,000. And the buildings were 350,000. 350,000, and delivery vans were 70,000. Stock was 25,000 from the question. Creditors 30,000, which will go down below in the liabilities. Then it says that, so that's all these figures in. The purchase price was discharged by granting the seller 380,000 shares at €1 each, and a share premium of 20 cents per share, which would be 20% of the 380,000. So share capital, or ordinary shares, is going to go up by 380,000, and share premium will be 20% of that, 76,000. So now we just total our liabilities, which come to 486,000. Our assets add up to 445,000. So the difference between 486 and 445 will be goodwill, which is 41,000. That is January complete. The next month, and we'll just total those quickly. So the assets in January come to 486, and the liabilities we've also added already, which are 486. So January is balanced. In February, there was a creditor So we owed a creditor 8,900 and they accepted a van, the book value of which was 9,500 in full settlement of the debt. So we have a profit of 600 because you only owed them 8,900. We have a loss because we owed them 8,900 and we gave them a van which is worth 9,500. So we're down 600. And this delivery van had cost 14,500 when we bought it. So for February, I'm just going to do a quick working down below here. So we want to see whether we made a profit or loss on the van when we gave it to the creditor. So the cost of the van from the question was 15,400. It says that it had a book value of 9,500. So sometimes they give you the depreciation and you work out the book value. Sometimes they give you the book value and you have to work out the depreciation. In this question, the book value is 9,500. Which means the depreciation must have been the difference between the two, which was 5,000. Now, we owed the creditor 8,900 and we gave him a van that was worth 9,500. So that is a loss of 600. And these figures have to be reflected now in the tabular statement. So if we go up to February, the first thing we're going to do is to take out the cost of the van that we sold, 15,400. We do not have that van anymore. We also need to take out the depreciation on that van, which from the working down below is 5,000. So as depreciation of vans is a minus, to take it out, I'm going to put in a plus 5,000. We do not owe that creditor 8,900 anymore because we gave them the van. So creditors are going to go down by 8,900. And we made a loss because we gave them a van worth 9,500 when we owed them 8,900. So we have a loss of 600. So our profit and loss balance will go down by 600. So now I'm just going to total these to make sure that they balance. So the assets add up to minus 9,500. And the liability should also add up to minus 9,500. April, Cooper decides to revalue land and buildings on the 1st of April to 1.2 million. This includes land valued at 180,000. Well, the land element is only relevant in December when we want to calculate the depreciation. So for the moment, we're just going to revalue the land and buildings to 1.2 million. So if we go back to the question, what are land and buildings at the moment? Well, there were 727, and then we got an additional land and buildings of 350. So 727,000 and 350,000 is 1,077,000. And we're going revaluing them to 1.2 million. So the difference between 1.2 million and 1,077,000 is 123,000. So land and buildings are going to go up by 123,000. Because now I can see if I add these across, they sum to 1.2 million to what they should be revalued to. When you revalue land and buildings, you have to take out the depreciation. At the moment, the depreciation is minus 54. So to take it out, I'm going to put in a plus 54,000. We're going to total these two figures. And the total of these will go down below in what's called a revaluation reserve. So we need to open up a new line, call it revaluation reserve, and we put the 177,000 into the revaluation reserve. In May, we got a bank statement showing a direct debit of 8,400 to cover advertising for the year ended 31st of the 8th, 2012, and a credit transfer of 9,900 to cover 11 months rent receivable from the 1st of the 3rd, 2012. So there's two different things going on here. First of all, the advertising. We just need to be very careful with the date and the advertising to see at the end of the year, is there advertising due or advertising prepaid? Now, we're doing the tabular statement at the end of December 2012. So if we only paid advertising up to the 31st of the 8th, 2012, that means that there will be 4 months still due at the end of 2012. We haven't paid any of next year's. We still owe 4 months of this year. So that is going to be advertising due. So it'll go in expenses due, not expenses prepaid. And the second thing was a credit transfer of 9,900. So this was rent receivable in advance. Somebody overpaid us. They gave us 11 months rent. 8 of those months 10 of those months from the 1st to the 3rd, which is 10 months after this year. So they overpaid us a month's rent. So that's going to be a rent receivable prepaid, which is a liability. So for the moment, we're just going to put these figures in May, and we're going to work out the due and prepaid part in December like we did in the other questions. So first of all, I'm going to deal with the advertising, the 8,400. So the 8,400 is an expense due. So I'm going to go to my expenses due here, and I'm going to put in minus 8,400. The rent receivable prepaid is money in. So that is going to be a positive figure down below here of 9,900. So I'm after getting in 9,900 for rent. I paid 8,400 for expenses. So in total, I'm up 1,500. So that 1,500 is going to reduce my bank overdraft. So we're just putting in the figures here, and then we will tidy them up in December. We'll work out the due and prepaid element. So if I total my May assets, come to 0. If I total my May liabilities, they should also come to 0. And that's why I have a second column in December to work out the due and prepaid element. June. In June, there was a delivery van which cost 20,000, and this was traded in against a new van costing 30,000. So the cost of vans will go up by 10,000. An allowance of 5,500 was made from the old van, and the depreciation to date on the old van was 17,500. So I'm going to do a little working for this. So in June, now I want to see whether I made a profit or loss on the van that I sold. Well, the cost of the van that I sold was 20,000. It says that the depreciation on the old van was 17,000, which means that the van was worth or had a net book value of 3,000. We got an allowance of 5,500 of the new van, so if it was worth 3,000 and we got an allowance of 5,500, as the allowance is greater than the book value, we have made a profit of 2,500. If the allowance was less, we would have made a loss. So it's a profit of 2,500. And again, we need to reflect these figures in the tabular statement. So the first thing we're going to do is to increase the cost of vans by 10,000. So delivery vans cost will increase by 10 because we got rid of one that cost 20, and we bought one that cost 30. So the net effect is the cost of vans went up by 10,000. When we sold the van, we had to take out the depreciation of the van that we sold. So the depreciation of this van that we sold is 70,000. That has to come out. And again, as depreciation is a minus, to take it out, that's going to be a plus 17,000. The new van I bought cost 30,000. We got an allowance of 5,500. So what we actually paid is the difference of 24,500 because the new van cost 30. We got an allowance of 5,500, so we're paying 24,500. So if you pay 24,500, that's going to increase the overdraft by 24,500 because the overdraft and liability is a plus. So if you pay out 24,500, that would increase the overdraft. And as shown in the workings below, we made a profit of 2,500 when we got rid of the initial van. So profit is going to go up by 2,500. Now I'm just going to total these. So first of all, I'm going to total the assets for June, which come to 27,000. I'm going to total the liabilities for June, and they also should come to 27,000. In August, we received a payment of 2,400 from a debtor who was previously written off as bad and now wishes to trade with us again. This 2,400 was 80% of the original debt, and they're going to pay the remainder in January next year, or 20%. Because they're now going to pay us on the same day, we sold them goods on credit for €450, and this was a markup on cost of 25,000. And again, this entry comes in a lot in this question, where someone was previously written off as a bad debt. it's now a bad debt recovered. They're going to pay us, and because they're going to pay us, we then decided to sell them goods. So again, I'm going to do a working for this. So there's two parts to this. First of all, the bad debt recovered part. He gave us €2,400, and that was 80% of the original debt. So to get the full debt, if I get 2,400, divide by 80, multiply by 100, the original debt was 3,000, meaning they still owe us 20%, which is the difference of €600. Now, because he's going to pay us back, we sold him goods with a selling price of €450. And this was a markup on cost of 25%, so the selling price was 125%. So to work out the cost price, if I get 450 divided by 125, multiplied by 100, the cost price is 360, which meant the profit was €90. So to put this into the tabular statement then, for August, first of all, I'm going to reduce stock by €360 because the cost of the stock that I sold them was €360 and stock was valued at cost price. So stock will reduce by €360 as we do not have that stock anymore. Debtors will increase, and it will increase by the amount that he still owes us of €600 for the bad debt and the 450 he owes us for the goods that we sold, which you can see here totals 1,050. So debtors are going to increase by 1,050. My bank overdraft will reduce by the amount that we received, which is the 80% or the 2,500. So bank overdraft is going to reduce by 2,400. And my profit and loss balance is the last figure I have to put in. Now, what goes in profit and loss balance? Well, this total 3,000, we thought we were never getting this back. Now we're getting it back. So that's going to be all profit, along with the profit from the goods that we sold them of €90. So in total, profit is going to go up by 3,090. So profit and loss balance will increase by 3,090. Now again, I'm just going to total my assets and liabilities to make sure that they balance. So my assets come to 690 and my liabilities should also come to 690. Now for December, well, first of all, we'll work out the depreciation for December. So depreciation on buildings is charged at a rate of 2% per annum of value at the 1st of the 4th, 2012. And it just tells us the depreciation delivery vans is 28,000. So there's no working out there. We just need to work out the depreciation of buildings. So again, I'm going to do a working for depreciation of buildings. The value of the buildings is the 1st of the 4th, because the question says it should be 2% per annum of value at the 1st of the 4th. So at the 1st of the 4th, buildings were revalued to 1.2 million. So the value was 1.2 million. It also says in April that the land was valued at 180,000. And we need to take out the land element, as that is not depreciated. And that gives us 1,020,000. The depreciation rate is 2%. So to get 2% of 1,020,000 is 20,400. Now again, the wording on this can be slightly difficult. In some questions, it's just worded differently. So it says depreciation on buildings is charged at a rate of 2% per annum of the value at the 1st of the 4th, 2012. So of this value here, we're only working it out from the 1st of the 4th is what it means. And I know the wording on it isn't great. Sometimes it's hard to understand if they're asking, should you depreciate it for a full year or just from the start of April? So here, I think they just want us to depreciate it from the start of April, which would be 9 months. So we just get 20,400, and we're going to multiply that by 9 over 12, which is 15,300. And again, I don't like the way they word that. It's hard to understand what they're asking sometimes. So to put in these depreciation, so we're after calculating the depreciation of buildings is 15,300. So if I go up here to buildings, land and buildings, depreciation. Now, as depreciation is a minus, if it's increasing by another 15,300, it's going to be minus 15,300. They told us the depreciation of delivery vans was minus 28,000. So then my total depreciation for the year is minus 43,300. And that is going to go down below in the profit and loss balance as minus 43,300, as depreciation is an expense and expenses reduce our profit. So whatever totals above will always go down below in profit and loss balance for the same amount, minus 43,300. Now, we have a second column here for December, and that's to tidy up the May part, see what is due and prepaid in May. Again, I'm going to do a working for this. So first of all, I am going to calculate the rent receivable prepaid. So if I go back to the question, I can see that the rent receivable is 9,900, and that's for 11 months from the 1st of the 3rd, 2012, meaning 10 months over this year. So I'm going to work out this year's element, the 10 months. So to do that, I'm going to get my 9,900, divide by 11, because it was for 11 months, and 10 of those months are for this year. So 9,900 divided by 11 multiplied by 10 is 9,000. I'm also going to work out the advertising due. Now the advertising due, advertising was 8,400, and that was for the year, so for 12 months. How many of those months were for this year? 8, up as far as the end of August. So to calculate this, I'm going to have 8,400 divided by 12, because it was for a year, and how many months are for this year? 8 of the months are for this year. So 8,400 divided by 12 multiplied by 8 is 5,600. And I now need to put these figures into the tabular statement. But first of all, the rent receivable prepaid, 9,000, is going to go in as a minus 9,000, because 10 of those months are affected in this year's accounts. So that would mean that 1 month, 900, will be still due at the end of the year. The the expense due, the 5,600 will go here in expenses due, because only 8 of those 12 months were for this year, so it's going to go in as a plus 5,600, the opposite sign of what we put it in May, and the same with the rent receivable. And then the difference between the 9,000 and the 5,600, which is 3,400, is going to go in profit and loss balance, because we're after saying we received 9,000 for rent during the year, we paid out 5,600 as an expense, so the difference, the 3,400, is going to go in the profit and loss balance. So now I'm just going to total December assets, and they come to 0. I'm going to total the December liabilities, and they should also come to 0. So that is balanced. Now I just need to add all my figures across. So I'm going to start with my assets. Let's total them all quickly. Goodwill is 86,000. Land and buildings is 1.2 million. Depreciation minus 15,300. Delivery vans 155,500. Depreciation of vans minus 46,000. Stock 116,240. Debtors 55,800, and the total is 1553290. I'm just going to total my liabilities now. I'm going to add these across. So creditors come to 96,500. Bank overdraft 36,400. Expenses due 1,400. Ordinary share capital 980,000. The share premium 156,000. Profit and loss balance 102,590. Revaluation reserve 179,500. Rent receivable prepaid 900, and the total again is 1553290, and we can now see that that is balanced. So I hope you found this useful. if you did, please like and subscribe to the YouTube channel, where I have a few other tabular statements and lots of other questions worked out. Thank you.